Welcome to ETF Leaders, powered by the New York Stock Exchange. Joining me today is Nick Elward. Nick is Head of Institutional Product and ETFs at Natixis Investment Managers. Nick, great to see you. Thanks for joining me.
Nice to see you, Judy. Thanks for having me.
Thank you. All right, so Nick, tell me, what are your expectations for the markets in the second half of 2022?
Well, we definitely expect more volatility. I know the last few years, living through COVID, it's been very volatile, but this year we expect more of the same. And I see that as primarily being driven by just increasing prices, whether that be home prices with real estate prices being at all-time highs, or the price of oil leading to the price at the pump that continue to rise. So that's certainly one trend that we're seeing, one that we expect. Additionally, of course, this leads to inflation, and inflation rates, we all are hearing about that, is leading to higher interest rates, and we've seen that already. That will continue, so that's clearly a second trend that we would expect. And all this in the end, these two factors lead into consumer confidence, and I've been watching that carefully. University of Michigan comes out with a regular consumer confidence report, and they came out in March showing that we're at a decade low level in consumer confidence. So all of this puts forth a story of volatility, like I mentioned at the outset, and then financial advisors and investors have to be prepared.
Yes. All right, and tell me, what are you hearing from institutions and advisors right now?
Yeah, so certainly with the equity markets off their all-time highs in a pretty meaningful way in a few cases, we're hearing financial advisors trying to optimize portfolios. One way they're doing that is tax loss harvesting. So if they have a built-up unrealized loss in a portfolio for a given security, an ETF as an example, they might be selling that, capitalizing on that loss, getting some tax alpha, and then replacing that with another product. So that's been a bit of the talk of the conference with people active in that space. And what I've seen with that is that in some cases, with the market volatility, it's been something that's been driving people to active products. So we've seen some people talking about tax loss harvesting and passive products and rotating to active products.
Okay. All right, and tell me, which of your ETFs are a good fit for the current market environment?
Yeah, certainly with interest rates rising, I'd focus on shorter duration products. So the Natixis Loomis Sayles short duration fixed income ETF, LSST, would be a great choice in that area. And that's the blue chip short-term bond fund ETF that a lot of investors of ours have been very happy to have owned over the last 4.5 years that it's been live. And the other one, as portfolio managers and advisors are upgrading portfolios, maybe moving away from passive and looking to active in this time of market volatility, one that might be interesting is the Natixis Von Nelson Select ETF, VNSE, because it's a concentrated portfolio focused on the equity market, has performed really well against the index and peers both last year and this year. That's one that they probably would want to consider as well.
Okay, all right, Nick, always great to talk with you. Thanks for joining me.
Great to see you, Judy. Thank you.
And that's ETF Leaders, powered by the New York Stock Exchange.